Welcome to Leadership Talk Financial Statements. What is Leadership Talk? Manitoba Agriculture and Resource Development industry leadership staff provide free webinars on building the organizational capacity within the agriculture sector, which results in high-performing organizations. This content is designed for informational purposes only. This information is not intended to be a substitute for professional advice. Organizations should consult their professional advisors related to specific situations. Today, we're going to talk about the main financial documents of any organization or business: budgets, financial statements, including income and expense statement, balance sheet, and the statement of changes in financial position, audits and reviews, as well as your role as a director in the financial reporting process. Financial statements are a method of reporting the financial resources of an organization and what has been done with their finances. They are also a method of comparing this year to the budget or 2 or more years of financial activity at a glance. The financial statements of the organization may include budget, income statement, balance sheet, statement of change in financial position, as well as the statement of the auditor or reviewer. Webster's New Collegiate Dictionary defines a budget as a statement of the financial position of an administration for a definite period of time based on estimates of expenditures during the period and proposals for financing them. A budget is a written plan that forecasts income and expenses for a particular time period, usually for 1 year. An organization may also choose to develop a budget for a longer period of time when there are long-term goals to be reached. Expressed in dollars, the budget is based on an organization's goals and ensures realistic planning of programs. A budget is the starting point for your financial planning and one of the comparison points for the review of year-end reports. How does the actual summary of revenue and expenditures compare to what was budgeted, and where do the variances occur? An organization will have an overall budget that may also include sub-budgets for specific projects. Remember, a budget should be visited regularly throughout the year and revised as necessary. Figures may need to be adjusted up or down. Revisions, particularly those which increase spending, should be voted on and passed by the board. Before approving the budget for your organization, check that the activities planned are receiving adequate funding and that all expenses are accounted for. What to look for: is the budget consistent with goals and plans? Are projected revenue and expenses reasonable? Have you done a comparison to previous budgets and income statements, and has the organization made any necessary adjustments or changes? If there is a deficit, are there surplus funds to cover the shortfall? The board should approve the budget before monies are spent, as close to the beginning of the new fiscal year as possible. Year-end financial statements are the key to understanding the financial position of the organization. The financial statements will give the board a summarized picture of how much has been spent, where it has been spent, what income was generated, and how these compare to the budget and to past years. When examining the year-end financial statements of the organization, each section will be labeled with the organization's name, the time period the report covers, and the type of report. The report may include a statement by the auditor or reviewer that describes their findings and any recommendations or concerns. The statement may also describe any major changes to note from the previous year. The report will include the balance sheet and income statement, and may include a statement of changes in financial position. Ideally, the year-end financial statement will show a comparison to one or more previous years as well as to the year's budget. An audit and a review are different in the scope of their examination of the financial records. Your organization's constitution and bylaws will indicate what level of examination must take place. Webster's New Collegiate Dictionary defines these accounting terms. Audit, a formal or official examination and verification of an account book. Methodical examination and review. The final report of an examination of books of accounts by auditors. An audit is undertaken annually by an accountant to establish accuracy and efficiency. Webster's New Collegiate Dictionary defines review as to go over or examine critically or deliberately. If you do not use an official audit, the organization should have an annual financial review by an individual who is not a member of the organization. Keep in mind, a review is not an audit. It is usually less expensive and less detailed. It does not provide the same level of assurance as an audit by a professional accountant and does not satisfy the requirement for an audited financial statement. A review may be completed by anyone with accounting background who is not a member of your organization. The balance sheet is a summary of the financial position of the organization at a specific time. It shows all the assets and liabilities on a specific day. The statement is based on the equation total assets equals total liabilities plus fund balance or equity. It reflects what an organization owns and owes. The balance sheet may report for a single year or show 2 or more years for comparison. The balance sheet may also be called the Statement of Financial Position. Please note, a balance sheet must always balance. Assets must equal liabilities plus surplus equity or net assets. Your organization's balance sheet could include a comparison to previous years. It is recommended that you try to include a comparison to at least 1 year. Having the comparison gives board members an easy way to look at changes to the organization's financial health. Items listed will include assets, something that is owned by or owed to the organization. Liabilities, something that is owed by the organization. Equity, fund balance, net worth or capital. Also known as net assets. This is the difference between the total assets and the total liabilities. Most organizations will have more assets than liabilities. What is left over is shown as the balance or net assets, which is the net worth of the organization. More specifically, the items listed will include assets. Current assets are money or items of value which can be readily converted into cash. Examples include cash, including cash on hand, funds held in checking or savings accounts. Investments, GICs, etc., accounts receivable, inventories of items for sale or supplies to be used, prepaid expenses and services. Fixed assets are property or equipment that is expected to last longer than 1 year, such as land, buildings, or office equipment. Liabilities are debts or amounts owed by the organization. This includes money owed to suppliers for services and amounts owed to employees for wages or salaries. Current liabilities are obligations due and payable within 1 year, including any loan principal payments. Long-term liabilities are obligations such as loans or a mortgage to be paid off in more than 1 year. Equity, net worth, or capital. Equity equals assets minus liabilities. Reviewing the association's equity is important because it shows the accumulated worth of an organization. Let's look at a simple example of a balance sheet. This sample shows a simple balance sheet with a 2-year comparison. Under current assets, the organization has $600 in cash and $200 in accounts receivable for a total current assets of $800. This shows a slight increase from the previous year. Under fixed assets, the organization has listed amounts for office equipment and land for a total of $15,000, with no change from the previous year. Total assets are $15,800 versus $15,725 1 year ago. Looking at the liabilities, current liabilities include accounts payable at $2,000 and a loan payment for $350, for a total of $2,350, slightly up from the previous year, which was $2,250. Looking at equity or net assets, the organization has a year-end equity of $13,450, which is the total assets minus the total liabilities. The balance sheet indicates that although the organization has slightly higher liabilities than the previous year, it is in a slightly stronger overall financial position with a higher total asset. That being said, it does have accounts payable of $2,000 with only $800 of current assets. This standing is similar to the year previous and may indicate they have a higher cash flow and income at the beginning of the year. The balance sheet represents the organization's net worth and demonstrates financial stability. As you review the balance sheet, here are some questions to ask. What items are included in accounts receivable? When are these accounts to be received? What is the risk that the income will not be received? Are the amounts similar to the previous year? What items are included under accounts payable? When are they due? Is there enough cash to cover them? And why are they being carried over? Compare the current balance sheet with previous year's statements. Identify any trends that might be an indication of changes to the financial health of the organization. If there are any investments, are they earning a reasonable rate of return? How accessible are they if the funds are required? The income statement may also be known as the Statement of Operations, or the Statement of Receipts and Disbursements, or Statement of Revenues and Expenses. It summarizes the revenue and expenses for the time period and will indicate the net loss or gain for the financial period. The income statement may be a general overview of all revenue and expenditures, or may have several individual event statements of revenue and expenditures plus general operations. Often, if an organization chooses to break down their income statement into event reports, they will also have a summary page that lists the individual events totals under revenue and expenses to arrive at their grand total for revenue and expense plus the overall net income or loss. This format will allow the board to not only review the overall operations of the organization, but the breakdown for specific activities as well. The income statement lists the actual income and expenses. It uses the same categories as the budget. The list of categories should not be too large as to be cumbersome, but should not be so limited as to make it difficult to determine how funds are actually being spent or what specific sources of income exist. It is strongly recommended that it include a comparison of actual revenue and expenditures versus the budget. This comparison can be used to start the budget process for the following year. What areas need more funding or less? What areas of revenue need to be adjusted for the upcoming year? What areas may be removed from the budget because they are no longer used? It is also helpful to include a comparison to one or two previous years' actual revenue and expenses. This allows the group to get a longer-term picture of their financial health. Did something happen this year that caused the change in financial health? Did the group have new initiatives or unusual sources of income? Here's what to look for. Reasons for any significant differences between budget and actual should be explained. Reasons for unbudgeted revenue and expenses should be explained. Have the budget figures been updated to reflect any motions for changes that were made over the year? If the categories for expenses or revenue are not clear, ask for clarification on what this includes, and possibly why that is how they are grouped. It may be appropriate for future years to break down categories that have large totals into subgroups or separate groups. For example, the category overhead might include staffing, utilities, rent, and taxes. Without going back to the journals, it is difficult to tell what contributed to an increase or decrease. This is a very simple income statement. It shows a comparison of the actual income and expenses to the budget, as well as how much the actual varied from the budget. The organization has chosen not to use event reports as their budget is relatively small and straightforward. Revenue includes grants, fees, donations, fundraising, and miscellaneous. A comparison to the budget shows that there was $250 more income than budgeted, but that 3 of the categories came in at less than budgeted, while donations and memberships were larger than planned. These variances should be taken into account when planning the next year's budget. Expenses include administration, meetings, travel, promotion, honoraria, supplies, and depreciation. Administration, promotion, and supplies were higher than budgeted. The original budget did not take into account the need to depreciate fixed assets. Although the net income was still in the positive, it was less than what had been projected. Total revenue was 5% higher than budgeted, but total expenses were 10% higher than budgeted. In this case, if revenue had not been higher than budgeted in 2 categories, the budget would have been in a deficit. When examining the income statement, it may be possible to draw a connection between the increased cost of promotion to the increased donations or membership fees. The statement of changes in financial position connects the balance sheet and the income statement. It shows the changes in the fund balance over a period of time. It includes information on previous years for comparison purposes, and allows the board to see at a glance the changes in financial status. This will sometimes be included at the bottom of the balance sheet. The beginning fund balance, or equity, is taken from the previous year's balance sheet. The surplus, or deficit, of income over expenses is taken from the current year's income statement. The total should equal the ending fund balance, or equity, taken from this year's balance sheet. What is your role as a board member? Management of an organization's finances is one of the most important responsibilities of a board member. As an individual, by voting for financial policies and the budget, and by understanding and agreeing with what you are voting to approve. As a board collectively, by being responsible for the financial health of the organization. This includes the budget, accounting system, and financial policies. As a board member, you need to support your organization's financial procedures and best practices. The financial statements will demonstrate to your membership and stakeholders the organization's activities and fiscal responsibility. Reviewing your budget and your year-end financial report can be the first step in evaluating your activities and planning for the future. Ongoing monitoring ensures that the financial plan is staying on track and allows for adjustments to meet changes in circumstances as they occur. Does your budget reflect your organization's strategic plan, mission and vision, long and short-term goals? Do you need to adjust your budget to include line items that reflect your short and long-term goals? Are there line items that you can delete because they are no longer used? Does it support any new goals that have been set? Do you need to add a line item that shows funds being set aside for a long-term project? For example, an upcoming anniversary or a new capital project. Does your budget reflect your organization's current activities? Are you finding that you are consistently under or overestimate revenue or income in particular areas? Why is this happening? What can you change for the next year's budget? Are you not using some budgeted funds? Why? What does your budget and the year-end financial statement tell you? Are you consistently losing monies on certain activities or events? Is it time to consider why, and are there changes that need to be made? Are there events or activities that are tradition, or are they needed to meet the requirements of your constitution and bylaws? Are there activities that are successful and deserve more financial support? How will you use this information to plan for your new year? Are there partnerships you may wish to consider? Are there new initiatives you would like to undertake but need to find funds to support them? Financial statements are a method of reporting the financial resources of an organization and what has been done with their finances, and a method of comparing this year to the budget or 2 or more years of financial activity at a glance. Reviewing your budget and your year-end financial report can be the first step in evaluating your activities and planning for the future. In addition to the Manitoba Agriculture and Resource Development Industry Leadership Resources webpage, here are some resources that provide information on financial statements for nonprofit organizations. How to read financial reports, a fact sheet from SAS Culture. Understanding your organization's financial statements from the Ontario Ministry of Agriculture, Food and Rural Affairs. And finally, from Chartered Professional Accountants Canada, this link will take you to the resource, A Guide to Financial Statements for Not-for-Profit Organizations, Questions for Directors to Ask. Stay connected by sending questions to leadership@gov.mb.ca. Make time to visit our Manitoba Agriculture and Resource Development Industry Leadership webpage at www.gov.mb.ca/agriculture. There you will find a number of resources, including fact sheets and worksheets, templates and guidebooks that will help you strengthen your organization. You will also find contact information for rural leadership specialists who are available to work with your agriculture organization. The website contains a wealth of information related to starting an organization, developing a strategic plan, being a board member, board operations, and dissolving an organization. The resources section also contains a number of tools and links that you will find helpful. Please join the conversation with Manitoba Agriculture and Resource Development. Subscribe to our newsletter by going to this link. Visit our website, manitoba.ca/agriculture. Call our General Inquiries line 1-844-769-6224. View our videos on YouTube, youtube.com/Manitoba Agriculture, and follow us on Twitter, twitter.com/MBGOVAG.